I want to thank you for the attending of the breakout session for Abraham Investment Management at the Emerging Manager Conference here in Miami Beach. I especially want to thank Bucky and Frank for having me at these conferences. I've been in the one in New York and London and Chicago, and actually you're really lucky to be attending. They're amazing, great for networking and meeting all kinds of people. I've met people from family offices, all different types of money managers, registered investment advisors. Really, it's just a great conference, and you're really lucky to be attending. And I feel fortunate to be presenting. So let's get started. Always, we have a disclaimer that the information that I'm going to be discussing is not any personal recommendations or anything like that. And really what my goal is to educate you so you become better investors. I am a CTA, Commodity Trading Advisor, as well as I'm an author. I have a book out with Wiley Books called The Bible of Trend Following, How Professional Traders Compound Money and Manage the Risks. And you can pick it up on Amazon if you'd like. And what the book really details is how I think as a trader, and it isn't any magical formula. What the book really encompasses is really it's the whole deal. And I wrote the book for my children to teach them what it takes to be a successful trader, or I'll add this word, a consistent trader over long periods of time, which is it's not just any magic formula or any holy grail idea. It's how to think. It encompasses risk management as well as the actual strategy, which we're going to talk about. I also have a new book coming out. Actually, I just finished it. I'm sending it out for reviews. And I invite you, if you're a money manager or a family office or registered investment advisor or anything, just say an FA, I would love to send you the book to review. I'm looking for people to review the book, critique the book before I present it. And you can just email me at andrew@abrahamcta.com. It's andrew@abrahamcta.com. And actually, you'll see it on my contact details, but I am looking for people to review the book before I send it out. The goal of our discussion is how to really create wealth in this environment. And we're in such a unique and strange environment. I mean, I touch base and I network with all kinds of investors and money managers, and people are very confused on what to do in this environment. And what I present is it's an actively managed, that I go long or I go short. It's a trend following approach on markets that are so diverse, that are all over the world, that I look at Asian markets, I look at European markets, I look at US markets. And I'm not talking just stock markets. I'm talking the commodity markets, interest rates, energies, the metals, the agricultures, the meats. Like one of the trades I'm in right now, I mean, I would never have thought about it, but for whatever reason, it's falling out of bed. I have a nice short on. And it's a staple in many of the Asian countries. It's called Malaysian palm oil. So really what the goal is to make ourselves available for any and all opportunities without any bias, without any opinions. And that's what really is the basis of my trading, to make myself available and try to mitigate the drawdowns. I want to say this, before I tell you it's a great time for trend followers and managed futures. There's a disclosure, and it's very important, that past performance is really, not necessarily indicative of future performance. Contrary to that, in my own opinion, I think that this is a great time for trend followers. My passion is building trading systems and mechanical trading systems. And there are two issues with these trading systems. Again, they're never going to be the holy grail, that you're always going to go through drawdowns. And what's interesting is the extent or the duration of the drawdowns. And right now, we're on an upper cusp of duration of drawdown. And again, the duration of this drawdown can get much worse because, again, we don't know what can happen. And past performance is not necessarily indicative of future performance. But in my real-time trading, that in my programs that I offer, I haven't taken out highs since it was like October, November of 2010. So you're pushing 26 months of no profits. No profits, and not just myself, but many other commodity trading advisors. And the saying is trend following dead. I'm taking it as a contrarian stance. This is the greatest time to be invested because you look at John Henry, who was one of the, let's say, fathers of trend following, he retired. He stepped down, and maybe it was because of lack of passion, and he got more interested in baseball, which possibly, again, I don't know. But the markets have been very, very tough. And you go through periods of markets that contract, and myself as a trader and a trend follower, like 2005 and 6 were very, very rough. 24 months, no profits, and big drawdowns. And then we stumbled into 2007-8, which were fantastic periods, in which we outperformed so many other asset classes. So here we are, almost in that same situation. We've had 2 years of flat performance to negative performance. And as much as there's these contractions, there are expansions. But no one ever really rings a bell. And in all sincerity, in my opinion, I think this is the greatest time to buy and buy drawdowns. And I actually have been doing that with other CTAs and allocating to them, because I do two things. Since 1994, I've been trading. I've been trend following because it's really a strategy that's liquid and transparent. And also I allocate to other CTAs, and there's only a handful that I would ever allocate to that really understand risk. So just in concise terms, I think you guys are sitting, and you're so lucky to be in this audience right now to be able to invest. And don't wait until I'm up 20% or 25% or maybe even more. I mean, I really believe now is the time to get on board. Again, but you know what? It's a personal decision. We trade our opinions. I mean, maybe it'd be prudent that you wait. I personally don't feel that way. How do we achieve long-term investment success? There's 4 parts. You have to have a methodology. This methodology has to be robust. It has to work on all time frames and all markets. Then you really need risk management. And really what that means is risk per trade, risk per sector, and a cap on open trade equity risk. Then even more important, and I put these in orders of, I feel, in my opinion, importance, because you can have all of this great systems or great money management, but if you override it, it's worthless. And there's too many traders that they second guess themselves, they tinker, they try to outperform their methodology. I mean, there's no way to avoid losses. And you will have losses. The key is trying to keep them small. And you have to have this proper psychology, and I call it a psychology of winning. It's not trying to find the holy grail because it doesn't exist. It really means staying in the marathon of trading. And you know what? You're going to go through periods, and my goal is to educate you. This is the whole point of this. That there's going to be time you're going to have trade after trade after trade that doesn't work. There are going to be small losses. And then some guys don't want to put that next trade on. You have to. This is what I talk about, the psychology of winning. And then, in order to have long-term success, you have to have the power of compounding over long periods of time. This is not a get-rich-quick. And it's like, this is an issue that comes up with my children. Taught them the idea of compounding since they've been 12 and 13 years old. And they've been trading with me. That they can compound money, God willing, for the next 50, 60, 70 years of their lifetime, which will come out to a tremendous amount of money for them and even more financial freedom for them. Let's talk a little bit more about psychology of winning. I say this all the time. You never know the future. You don't have to know the future in order to make money. But how do you expect to win or make money in an uncertain world? Because the only certainty is uncertainty. And really, what do you do to stay in this game? And I call it a game because it really is a game. And you know what? If you don't think of it as a game or a marathon, you'll never succeed. You need to ask yourself these questions. What gives you the confidence that you can win? And I gave an example a minute ago where you have trade after trade after trade that doesn't work at times. And I don't care what manager or what methodology or any system, you will have series of losses. But the key is to keep them small. And that's what differentiates success and failure. What does victory look like? Victory looks like having years of compounding money. And it's like David Drews, who wrote the foreword of my book, The Bible of Trend Following. He said, what does victory look like? Getting knocked down and getting back up. Getting knocked down and having the gall or the fortitude to get back up. And it's how much pain do you have to suffer? You know what? This is not easy. I have losses all the time. But in a marathon and sports, because there is a tremendous analogy between these, none of it's easy. Can you imagine being a football player and getting knocked down all the time? You have to get back up. You're not going to cry when you get knocked down and it's a Super Bowl game or just a football game on Monday Night Football. You have to have the mindset of a champion. This is what it's all about, having the proper mindset. You have to believe anything can happen. You have to believe that you don't need to know the future in order to make money. Look at some of these outlier events that people got buried on. If it's the NASDAQ, if it was Enron, if it was WorldCom, or how about one that people never can imagine happening in the U.S.? The Nikkei, the Japanese stock market, in 1989 was 39,000 something. 39,000, 1989. Today, as we're sitting in this room, it's approximately 9,500. How many years of lost money? You need to believe that anything can happen. Most people, they don't believe it. In our firm, Abraham Investment Management, we expect them. We embrace these outliers, these Six Sigma events. And actually, that's where we make our money. I started alluding to sports and investing. Every sports game has rules. Like investing has rules. A trading methodology has to have a series of rules so you know exactly what you should be doing at all times. And if you don't follow the rules, you're not going to win. You won't be in the game. You'll get thrown out of the game. You'll lose money. Your clients will leave you. The other idea about sports is people seem to have the wrong attitude. I get asked, I really want to say it's a dumb question. How was last month? Or how was last year? Well, let me tell you the reality. It doesn't mean anything. It means nothing. It's whatever the markets can give us when we have a robust methodology and proper risk management and the proper psychology of winning. On a personal level, in 2010, I netted out 34% to the investors. And then 2011, I was down. I was minus. So all of a sudden, in 2010, I was smart. In 2011, I was dumb. No, it doesn't work that way. Because this is a game. This is a marathon. Any month, any year doesn't mean anything as long as you understand how the trader trades. Like in football or soccer. Go back and forth and back and forth. And really nothing happens most of the time. Same thing with trading. But you know how a game is won in football? Could be the 2-minute warning in the fourth quarter, like we are right now. And there's a touchdown. This is what wins the game. Baseball. You can have inning after inning after inning. Nothing happening. And all of a sudden, bottom of the ninth, as they say, there's a home run. Think about soccer. The ball goes back and forth and back and forth. They're not scoring every minute, so why should a money manager try to make money all the time? The only money managers that make money all the time, the only two that I can think of, both in jail right now, is Stanford and Madoff. You can't win all the time. You always are going to have losses. I was invited to invest with Madoff because I grew up in South Florida. My buddies are in South Florida. And as a trader, because I've been trading since 1994, I couldn't understand how he didn't lose money. I mean, I lose money all the time, but I lose money small amounts. And I could not understand how year in and year out, he didn't lose any money. And I was called a schmuck. I was called paranoid, and really, thank God I'm the paranoid person I am, because I didn't invest with him, and my buddies that did invest with him lost a lot of money. Actually, in my new coming book, this new book which I put out there for review, I wrote a whole chapter about Madoff, about doing proper due diligence. The book, it's how to invest in world-class money managers, what needs to be done. And again, I invite you to email me and I'll send you the book, and you'll learn a great deal. And this is really my goal, is to educate. And the interesting thing is, I'm taking such a different approach than I think any other money manager. I've been investing in CTAs and hedge funds since 1994. No one has ever educated me. And I'm doing this for two reasons. One is, if I can help someone, I get it back myself. I feel like that good deed. But it also reinforces my own thinking because, again, this is not easy stuff. Trading's tough. The difference between a gold medal winner in the Olympics. Think about it. In these running races or swimming races, the winner wins by milliseconds or tenths of a second. What's the difference? And you're probably going to know the next slide. To me, it's passion. Nothing great in this world happens without passion. And I put this slide in about passion because I have a neighbor, a boy, who plays soccer. And I'm up at 5 o'clock in the morning. I enter my orders into Chicago. Plus, I'm addicted to trading. I test and I love testing different ideas. But at 5 o'clock in the morning, most people are not up. I mean, the newspaper gets delivered. I hear it gets delivered. But when I first moved into my house, I would hear this. Couldn't figure it out. What it was my next door neighbor would be kicking this boy before he would go to school. He's practicing playing soccer. I don't know that many 15, 16-year-old soccer players that get up before school to practice playing soccer. This is the idea of having passion, going that extra mile. It's like with my trading, and it's like maybe it's obsession instead of passion. I'll wake up in the middle of the night to test trading ideas, and I'll write them down on a piece of paper next to my bed, and then I'll sit the next day and try to figure them out. Or I'll email my programmer, and he's as passionate as me or obsessed with trading as I am, and we work on them to try to, again, what I really want for my family, I want a world-class trading system. And every percentage increase, and I'm not looking for the Holy Grail, because I know it doesn't exist, but there are enhancements that I've done over the years that have improved my trading. And those enhancements compounded make a big difference. I have this picture of the dentist. There's people that think, that you go to Harvard or Yale and I'm not belittling any of that makes you a better trader. I sold a business that I started in college in 1994. I asked my accountant and attorney who their most successful investors were, because I always want to surround myself with the smartest people. Well, I got a phone number, and ends up the gentleman, the most successful investor, was a dentist. He started in 1979 with $200,000 and ran it up to about $18 million. Put things into context. They weren't computers like we have today. And the idea is, why did he succeed while so many others fail? I mean, the reality is 90% of traders fail. Even most CTAs blow up after 5 years. Why did he succeed? He didn't have the magic formula. He didn't have the Holy Grail. The way I believe he succeeded is he had the proper mindset. He kept his losses small. He didn't give up, because it's very easy to give up and quit, like everything in life. And he understood what compounding is. Going back to the idea about giving up, think about it. I said about a football player who's playing Monday Night Football. He gets hit hard. He's not quitting. A marathon runner, or even, I'll give you an example, my son. He runs from our house down to, on the beach, down to a mall that's maybe about 4 miles away and then back. He doesn't give up. How about a relationship, being married? If you give up on the relationship, being married, you don't get the grandchildren. Everything is commitment and passion and staying with it. And it's not easy. My wife doesn't hear this. It goes on to my next point. I'm sure that you have, maybe you like watching American Idol, or if you have kids that watch American Idol. They all claim they can sing. But you know what the reality is again? And maybe I'm saying it too much, the reality. Most contestants on American Idol fall short of their claims. It's the same thing with commodity trading advisors and money managers. Most swear up and down and beat their chest that they're the greatest, their systems work, and they're going to make you all kinds of money. But unfortunately, as I said before, most CTAs fail after 5 years that are new, that haven't, have the experience. And these CTAs fail because they lack basic fundamentals. They don't understand risk. Or they don't have the proper, let's say, psychology of winning, as I call it. But then there are some CTAs that do get it. Just like the singers who actually become the American Idol. There are some good CTAs out there, like there is an American Idol. There are few. They're not easy to find. The slide gives away my next, question. I was going to ask the question, who's the world's greatest investor? Everyone will tell me, Warren Buffett. I'm going to show you some points that are going to give you an aha experience or be very provocative. Look at this chart. You have some of these ugly 50% drawdowns. Imagine this, almost 5 years of not taking out his prior highs. Mr. Buffett, yet he's still considered the world's greatest investor. 2 50% drawdowns over the last decade, approximately. Yet he's the world's greatest investor. I'm not trying to negate him, because he does have a great record. But what can you do for me? How can I make money with you? If you look over the last 15 years, Buffett returned 3.62%. And all you do is you look at the price of BRKA, the share. And our goal is to compound money. This is what the deal is. The power of compounding. Einstein called compounding the greatest mathematical discovery of all time. This is what it's about. And this is our goal here. And on the desk, you'll see a paper from Marhedge. And in this Marhedge paper, I highlighted on the back of the page an investor who invested with Hawksbill. He put $300,000 in with Tom Shanks in 1988. He was his first investor. And today, and as you're reading this from Marhedge, and again, if you're listening to this or watching this somewhere else, I'll email you the page from Marhedge. But 300,000 went to 19 million. As what's written in this article, it shows that this investor pulled out $1 million, and by 2003 it was 18 million. But guess what, guys? We're almost in 2013. Compound $18 million going forward, and figure out over the last 10 years what that's worth. I called, I asked, I talked to the marketing people, I was curious, and I was even more shocked. That 18 million went to about 30 million, and I was even more shocked. This same investor who invested $300,000 in with Tom Shanks also invested with Eckhart $300,000 in 1988. He also invested $300,000 in with Howard Seidler from Saxon. Today, it's worth about $80 or $90 million. This is the power of compounding. These managers that I mentioned, they're unique, but they don't have the Holy Grail. They all went through ugly drawdowns and long periods they didn't make money. For example, Tom Shanks had at one point a 60% drawdown. That's not comfortable. I believe Eckhart, off the top of my head, had something like 40-some-odd% drawdown. But the difference, like I'm trying to educate you, these investors, this investor in particular, he stuck it out. He stayed in the marathon. He got knocked down and he got back up. He got knocked down and he got back up. He didn't quit. And he has the benefit of all of these years of compounding. He stayed in the game. This is what I want to instill in you, that investing in commodity trading advisors in a handful, like myself, is not easy. But if you can stay in the game, you really can make a lot of money. Potentially. And again, as much as past performance is not necessarily indicative of future performance, this is a fact. This happened. The drawdowns happened, and they were ugly. And the durations of the drawdown happened, and they were ugly. But the key is staying in the game and not giving up. Show of hands. How many of you know your compounded rate of return? No one rose your hand. That's great. Because you know what the fact is? It's like a trading plan. If you don't know where you are, how do you know where you're going to get to? Really? You need to always think, at least I do. Maybe it's my obsession with compounding. And actually, that's what's probably going to be the name of my new book. The Bible of Compounding Money, or something along that line. And it's like, forget about last month or last year. Trading, investing becomes a lifetime strategy. I mentioned earlier in my breakouts discussion, my children have 60 to 70 years of compounding. Look how much money in the back of that Marhedge article that I gave you, I handed out. 300,000 with 3 different managers went to 80 or 90 million. And that was over, let's say, what do we got, 25 years? Well, guess what? My kids got a heck of a lot longer than that. This is what you can do if you're a family office. This is what you need to explain to your clients if you're a registered investment advisor. Not just look at the stock market. The stock market is just one market. Look at all kinds of markets. Make yourself available. Buy the strongest, sell the weakest. Put on low-risk bets. That's what it's about. This is what the idea of compounding is. And my first thought, some of you are going to say, well, 15% is hard. There are a handful of managers, of CTAs, that have accomplished 15%. Not for one decade, several decades, numerous decades. It is possible, but it's not representative of all commodity trading advisors. The idea is if you can compound at 15% over 10 years, you have 4 times your money. Over 15 years, you 8 times your money. 20 years, 16 times your money. And again, this is on average. 1 year might be 5%, 1 year might be 20%, 1 year might be minus 10%, 1 year might be 30%. It's an average. Oops. 25 years. Let's hope we live another 25 years, all of us in this room, at least. You almost 33 times your money if you stay in the game. This is my point. I proved to you the fact with Marhedge article, and I will email it to you. This is a proprietary account that I had, and I call it Pieces of the Puzzle. Or I'll even make it this way, I'll tell you. How easy it wasn't. At first glance, you say, wow, 19.75. Put me in there. But you know what? We're going to dissect this, and we're going to see how easy it really wasn't. Imagine you saw this, just looks like it's making money, just going up and up and up. And you waited until there was a great period, and then you get in, nothing happens. You have a long flat period. Some people quit. How easy it wasn't. 1 year, no profits. You get frustrated. What have you done for me lately? In my upcoming book, I stress the fact about buying drawdowns or durations of drawdowns like we're in right now. I really believe in it on a personal level and do it. I'll give you the next point. How would you feel? You have this great run up and you wait, and then you have this ugly, ugly drawdown. It went from 370,000 to about 270,000. There is a drawdown out there that is going to be the worst drawdown. There's always a worse drawdown ahead of you, no matter what system. And instead of doing what most people do, they buy the highs and then they get scared and they sell the lows. When there's a drawdown, this could be a great point of entry. Again, we don't know what future performance might be, but you know what? It's an entry point. I believe in it. I do it. Long periods of flat and elusive profits. This is reality. Why am I explaining this to you? To reiterate, to educate you how easy it's not. And if you give up, you don't, let's say, pick the fruits of success. You need to stay in the game and not quit. And my money is going to be next to your money. I'm looking for you to be my partner, not just be a client and then just go in and go out. That's not the key. That's not going to help you or me. I want to work with you for the next 20 years, God willing. Here's another example. More of nothing happening. And even getting worse. No one ever rings a bell when is a good time to invest. There isn't. You know what the best time to invest is? Early, and start compounding money. This is what the key is. Summation. I didn't really explain anything exactly about the trading programs that I have. I welcome the opportunity to speak with you about it. Everything is disclosed. Everything is transparent. Everything is liquid. My goal is to have educated, informed clients that we work together for our mutual long-term success. And I want to help you fulfill your investment goals. This is how you can contact me. This is my email, andrew@abrahamcta.com. You can come to the website. You can look at my numbers. You can get on my update list. I'm at your disposal, but we can chat. Again, if you want to get a copy of the Marhedge article that talks about how this gentleman compounded this money, I will email it to you gladly. And also, if you're an FA, family office, I really want to send my book out for reviews. I just finished this new book called, I don't even know the exact title. I'm trying to put it together. That's why I want to hear people's reviews. Something about the Bible of compounding money. How to invest in world-class money managers. I've done it since 1994, and I look to invest with the best. You try. Nothing is perfect, and you try to make your best shot. Again, I really, really thank you for attending the breakout session for Abraham Investment Management. I especially thank Bucky and Frank for, I guess, first having these emerging manager conferences. They're amazing. And again, I think they're 4 times a year. There's London, there's Chicago, there's New York, and this was the first time I was in Miami. They're great. Great for networking, and they're fun. I mean, I had a lot of fun. I mean, there's drinks, there's happy hours or cocktail parties, and everybody is open, and you meet all kinds of great people that otherwise you wouldn't be able to meet so well. So I really invite you, even though it's not my place to invite you, but I mean, these events are amazing for networking and learning. And if there's anything I can do to help you in any way, please contact me. These are my contact details. Thank you very much.